America! How are you Patriots doing today? Huh? How are you doing? You're wondering, what are we going to learn about Oklahoma home loans today? Well, guys, we're going to talk about closing costs. And I cannot tell you how excited I am to talk about closing costs today because I was asked yesterday, and Tom, hopefully you can help me answer this in the future. What is the difference between underwriting fee and doc prep fee? That's a question that I actually had yesterday when I was going through an estimated cost to buyer sheet, but Tom's going to go through it all with us today. Tom Rosser, Gateway Mortgage. Tom, where do we start on closing costs?
Oh my gosh. I don't know where to start on closing costs. So I just want to differentiate closing costs from down payment. I mean, that's definitely a thing where a lot of times I have to say to someone, hey, what do you want to bring to the table? Not what do you want to put down? So if you're buying a $400,000 house and you're going to do 5% down, what's that math, Josh?
20 grand.
20 grand. You're going to have a $20,000 down payment.
Mm-hmm.
In addition to your down payment, you will have closing cost.
Yeah.
Okay, so some people, let's separate those two, right? Down payment and closing costs separated.
Two different things. Okay.
The other thing I want to separate insurance and taxes and closing costs. A lot of times those are combined. And it's okay to combine them. It's okay to combine them. Just hopefully your mortgage lender is explaining the difference and what they are. So let's separate those two for this conversation and say we're just talking closing costs. Closing costs, three main things make up closing cost. Me, the lender. Number two is the title company. And number three is the government. Those are the three main things that make up closing costs. So me, the lender, we charge underwriting fee, we charge a processing fee, we charge a credit report fee, a flood zone fee, and appraisal fee.
And the appraisal and the flood zone, Tom, you have to do that per secondary market regulations, right? Like it's not like you're out there just tossing stuff on there. You literally have to do that to be able to process the whole loan on the back end.
Correct. So on the appraisal piece of it, we get automated findings that tell us whether or not we need an appraisal and what kind of appraisal we need. And then, market rate kind of sets appraisal costs. So you shouldn't pay, $700 for an appraisal for me and then $1,000 at appraisal for my neighbor. It should be similar cost for an appraisal of a similar property.
Similar property is key because if you're talking rural Oklahoma, they're expensive. But if you're talking, Homes by Tabor neighborhood in Oklahoma City, it's pretty straightforward.
Yeah. So the difference could be $500 right there. We just had one rural Oklahoma. It was kind of a large piece of land in a bigger home. It cost $1,000 for an appraisal. Well, I'll tell you a funny thing there on closing costs. We have to disclose accurately. And on that file, we thought appraisal was going to cost around $750.
Oh.
We couldn't find any way to do it for less than $1,000. So we had to pay the $250 difference.
Yeah.
Lesson learned from us, right?
Yeah. They've gone up, man. The rural appraisals are, they're just not training anyone. They're not training anyone. They don't want to work. They're at the retirement age. They don't have to work anymore.
Oh yeah. Okay. So lender fees, for us, it's about $1,200. I think that's kind of average. We look at it every 6 months and make sure that we're in the market and that we're competitive lender fees. So those are your lender fees, your processing, underwriting, flood zone, appraisal, tax cert. Those are the main ones.
Can you help me differentiate the difference? And I know every lender is different, but is an underwriting fee and a doc prep fee, is it because they're two different people? Like the underwriter is the person underwriting the loan, and then the doc prep is just like putting it all together. And I can only speak from the charges on the Oklahoma Real Estate Commission estimated cost sheet, and that's what they're called on there. Yep. So if they've got different names with Gateway, please educate us so that I'm using the right terms.
Well, they have the same names. Doc prep is generally a title company fee, but some lenders will charge doc prep fees as well.
Mm-hmm.
I don't know how to say this other than I would combine them all and not look at the little detailed fees, because you might say, hey, why'd you charge me a $20 doc prep fee? Well, sometimes when we send electronic document packages, we get charged. We'll
Yeah.
just pass that charge on. That's why we're doing
Yeah.
it. And then if you get into the details of all the fees, you don't need to really, because let's just say right now I charge $525 for processing and I charge $525 for underwriting. So that's $1,050. Those are my two big costs.
Mm-hmm.
I can make that $1,050 like 8 different fees and call them 8 different names.
Yeah.
And so I think that changes. In my career, those have changed. Where used to maybe you had 8 fees, and
Yeah.
now 5, but the total is still pretty much the same.
It's the cost of putting a loan together. I
Yep.
mean, you don't borrow money for free. I mean, look at the interest. If people paid attention to the interest they paid on the house cost them 2.5 times the amount of money over the next 30 years as it does when they buy it. They would be putting a lot more money down if they paid attention to that, if it was a big concern. But because people don't live in houses for 30 years, it doesn't matter. They don't look at that total cost over 30 years.
Correct.
So you talked about government fees. That's interesting. You mean the government's going to charge me to buy a house, Tom? What's that government going to do?
They record deeds, they record mortgages, they make a little bit of money every time someone buys and sells a property, for sure. But government costs are really low compared to lender and title costs. Government costs are pretty low. Now, title company cost is the second one I want to talk about, right? But the title company is going to give you title insurance. They're going to make sure that you're getting clean title to a property and provide you title insurance. Their fees can range, right? But most title companies, they're in the same ballpark, where we would say on a $400,000 house, I have notes, Josh, your title company fees are probably going to be like $3,000. I mean, they're going to charge you some money, but the title company will pull the old abstract, an attorney will read it, make sure that, there's no liens, there's no challenges to the title, we'll say. They charge you to do that.
Title insurance policy, it's expensive. It's expensive. You could Google different title insurance companies like Stewart, like First American, like Old Republic. You can go to the title insurance estimator, and a $400,000 house title insurance policy, you're looking close to $1,500. Half of those title costs are just the insurance policy. The great thing about the title insurance policy, Tom, is it runs with the life of your ownership, though. So it's not like you're paying it every year. It's a one-time cost.
Have you ever used yours?
No, I wasn't going to mention that, but I'd still buy it. I would still buy it.
Oh, I know. Me too. I tell everybody to buy it, but I still don't know anyone who's used it.
It's when they don't buy it that they need it.
Right.
And then when you don't buy it, that's when you need it.
Exactly. Okay. So title company, they're going to do the abstracting, right? They're going to provide you the title insurance. They do some doc prep stuff, right? They definitely charge you some doc prep stuff. They
do a majority of it that I see on my end. Like there's no such thing as a paperless real estate transaction. It ain't happening. They are making sure the lumberyards stay in business.
Oh yeah. And there's usually a closing fee, right? Because you're going to show up at a closing. You're going to show up at a title company and sit down with them for an hour. They charge you a fee to sit down with them for an hour and go through all those documents.
Thank goodness. I wouldn't be able to do it. If they're like, well, why don't you do this? I go, I don't know how to do that. That's what they're for.
That's why we have closers.
They're for.
Yes. That's why we have closers. Okay. So I think I covered the title company fees. What did I forget on title?
No, title on the buyer side that I'm familiar with is it's not necessarily a fee, but when you go under contract, you do have to put down some earnest money. So typically on a $400,000 house, you're putting down a $4,000 earnest money check, 1%, give or take. It's going to be applied to your closing. It's going to be applied to your side of the settlement statement at closing. And then you've got the title insurance, which is the most expensive part. Like Tom said, you've got the attorney review fee, the title report fee, you've got the doc prep fee, and then you also have a gap check fee, which is really, really, really important. That gap check fee, they usually do, in my experience, 24 to 48 hours before closing to make sure that there's no litigation affecting your home, your seller, or you as a buyer right before closing, because they're insuring the title to that property. So if they insure it, they close on it, and then there's something that comes up without that gap check fee, then they're going to run into hiccups that they could have prevented right before closing.
Yes, correct. Gap check, I think, at car loans for some reason, right? Don't they do a gap check on a car loan?
I think they offer gap coverage because
coverage.
you're usually underwater on a car when you drive it off the lot.
Yep.
I don't know about a gap check on a car loan, but I know they do the gap. They offer you gap coverage. But if you're paying 20% down on a car, then you're pretty well broke even, and you can also get gap insurance with your own insurance company, and sometimes it's less expensive. So put the two against each other when it comes to car loans. But verify with your car loan advisor, because Tom and I we're not car loan lender people.
No, we're
Can
not.
you do car loans, Tom? You're a bank.
The bank can, yes. The bank can tell.
Okay. If you guys need a car loan, reach out to Tom. He knows somebody.
I do. Okay, so another cost, right? We were kind of separating down payment, closing cost, insurance, and taxes. So that's the third piece is insurance and taxes.
Oh, yes.
It's your escrow account. It's very common. We get a ton of questions about the escrow account.
Yeah.
There's some guidelines of when you need an escrow account and when you don't. We'll get into that on another thing, because you can get into some details on whether or not you need one or have to have one.
Okay.
Say we're doing a loan that does require one.
Yep.
We will usually require 15 months of insurance up front, 3 months of taxes up front, and then interest through the end of the month that you're closing. So I'm going to go through those one by one. Insurance, 15 months of insurance. If you were to find a house today and it's March 22nd, I think.
Yep. 23rd, 22nd. You're right. 22nd. Yes. Sorry.
So it's March 22nd. Usually you'll close 30 days from now. You'll close on April 22nd. On April 22nd, on closing day, you will pay your insurance company 1 full year in advance. Yep. So that's your Farmers, your AAA, your State Farm, whoever you want to use for insurance, you get to use. And you pay them from April 22nd, 2023 through April 22nd, 2024. You will also deposit 3 months of insurance and 3 months of taxes into an escrow account. That is your money that we are managing to pay your taxes and your insurance.
Okay.
So let me look at these notes real quickly. On a $400,000 purchase, if insurance costs you $250 a month and taxes cost you around $400 a month, your deposit for your escrow account is $5,900. I mean, it's a big amount of money.
Yeah.
Full year of insurance can get expensive. And then on the 3 months of taxes. So you've got this escrow account that opens up on day one with 3 months of insurance, 3 months of taxes. Every time you make a payment, we add to that escrow account. Every December, we pull money out of that escrow account and we pay your property taxes. On the anniversary of your home loan every year, we pull money out of that escrow account. We pay your insurance another year in advance.
And so, Oklahoma, and a lot of people, I have this conversation with people all the time. Oklahoma and Kansas, they're always competing for who can be the most expensive home insurance state.
Yep.
So they're always competing. So for our customers that are relocating here that aren't used to our high insurance rates, those numbers Tom was tossing out there, if you're from another state researching about Oklahoma insurance, guys, we have tornadoes, we have wind, like we have 90-mile-an-hour wind, we have hail, frozen chunks of rock coming down from the sky to like smash everything. Think the Exodus, if you will. That's what we have in Oklahoma. Now, there's 694,000 people in the Oklahoma City metro area. We deal with it. But those insurance numbers Tom was tossing out there, you want to keep that in mind. That's what's knocking up those closing costs. That's what's making it more expensive on a $400,000 house or a $450,000 house or even a $500,000 house. You can very easily get to a $3,500 annual insurance cost. It's an expense you need to take into account. And man, it's hilarious when you hear some of these other states, Tom. They're like, yeah, we pay $1,000 a year for insurance.
Yep.
I'm like, what? But their sales tax, their income tax is through the roof. It's just crazy.
Well, yeah, and then you go to Texas, right? Just one south from us, and there's no income tax, but their property taxes are very, very high, right? So,
oh my gosh, it's like 3 times as much, right?
Oh yeah, I think we're supposed to have severe weather tonight, right? I don't know if I read that right.
I gotta go check the weather.
No, but okay. So what we tell people on insurance, right? Brand new house, brand new roof, next door to a fire station, you're probably going to get pretty affordable insurance. Old house, old roof, far from a fire station, it can get very expensive to insure a home in Oklahoma.
Yeah, and you want to pay attention between roof 100% replacement costs for insurance on your roof compared to just cost value or depreciated value on your roof for insurance. Because if you just get depreciated value cost insurance on your roof, then you probably won't even get enough to cover your premium. You just won't. So you want to save up a little nest egg to replace a roof. But title cost, insurance cost, tax cost, and government cost. Are there additional costs that people need to be made aware of on the mortgage side of things, not home inspections or stuff like, or down payment, just on the mortgage side of things?
No, I mean, I kind of skipped survey, right? Depending on the property, but we're going to need some sort of a survey, most likely. We do the cheap ones, right? But the mortgage inspection certificate, I think, is what it's called.
Yeah.
That's anywhere from $150 to $200. And then you get people that are buying acreage and they want land, and maybe they want a full pin and stake survey. That can get expensive.
If it's a cleared 10 acres, I was quoted $1,800 by 3 different companies on cleared 10 acres, and that was within a 30-minute drive from the city. So,
Yep.
And that's just for the 4 pins. That's just the 4 corners.
Yeah.
So yeah, surveys. If you want one of those, you also need to account for time needed to do the survey, because the way the real estate contract is written is the unless there's something crazy screwy wrong with the survey, it doesn't matter acreage wise when it comes to the survey if you don't get all that situated during the inspection period on the real estate contract. So you want to account for that timeline for a survey.
And what do you do there? You just get extended inspection period?
If they want a full-blown survey, yeah, we tell our customers, if you want a full-blown survey, we need to call these survey companies real quick, see how far out they are. If they're out 4 to 6 weeks, then we got to get the seller to agree to a 4 to 6 week inspection period so we can get that done in time. Because if you can't get that done in time and your inspections are over, if you don't turn in that TRR as a buyer, the contract clause D is written that you're accepting the home as is where it is. So the survey, regardless, you're accepting it. So you got to get that survey done during your inspection period.
Yeah. I think that's cost, Josh. I don't know what else what do we miss?
No, that's great. So title cost, down payment, insurance cost, government fees, and then lender fees. And then even though the costs have different names, they just are the cost of doing the loan. Like you could call it, bumblebee tuna fee, and it's still the cost because it's constantly changing names.
Correct. And if you're wanting to compare cost, it's easier to just compare the lump than it is to go line by line. You say, well, lender over here doesn't have junk fee B, but lender over here calls it junk fee, something else. But the names don't matter to me. Yeah.
When it comes to loan types, do any loans have less costs than the other, or some loans more expensive than the other? Like the USDA rural home loan, is that a more expensive loan because it's rural and it's 0 down compared to just your regular inside the metro FHA loan?
No, not really. I mean, some of the loan programs, you'll run into some additional cost, like some OFA programs or, some down payment assistance programs might have some additional cost because it's another entity reviewing that loan. And they'll charge you to review that loan. Mm-hmm. And then, some of the government loans come with funding fees, but those are usually financed into the loan as well. So you could view that as more expensive. But they're financed. So I would say no, generally our lender costs are the same for all the loans. When you get into some one-offs with the down payment assistance programs.
Okay. Cause their department, the people who are giving you that money, they have their own processing. They have their own underwriting. So Absolutely. All those steps, even though you're getting your down payment covered for you through that program with all the meeting the terms and conditions that apply, they've got a whole nother set of processing costs. I didn't even think about that, but that makes sense because someone's got to process it.
Oh yeah. And you want the gateway underwriter and the underwriter on the other side to agree. And sometimes that can be difficult. Well, how'd you come up with your income? How'd you come up with your income? It's yes. But yeah, there's definitely 2 entities looking at it. Each one's going to charge you.
That makes sense. More, what is it called? hands in the pot. Is that
Cookies in the jar.
cookies in the jar? Yeah. Yeah, that makes sense. Well, Tom, amazing information as always, especially when it comes to
Hands,
Oklahoma City. Say
hands
again, sorry.
jar. More hands in the cookie jar. Sorry.
More hands in the cookie jar. Yeah. Yeah. So how's your NCAA bracket going, Tom?
Well, I had the Jayhawks winning. I'm out of it, man.
Oh no, I have Alabama,
They're
and it
in.
looks like they're still in.
Absolutely.
I've got 39 points out of 155 points as of right now.
Okay.
Where do they start playing again tomorrow?
Tomorrow, yeah. I'll kind of watch it even though I'm out, but I just won't be as excited.
Right, right. And your fantasy soccer team, how is it doing?
I think I'm out. I think there's like 8 games left in the Premier League season, and I don't think I can catch up. But
Oh man,
it's been
is
fun.
it okay to talk about personal things? Can we talk about what you
Sure.
did earlier today?
What did I do earlier today?
The golfing?
Oh yeah, I went to a golf tournament with my oldest for sure. It was fun. Good old time at Lincoln Park Golf Course in OKC, and 7th grader playing our first 9 holes. It was fun.
Oh my gosh. Did they have to carry their clubs or did they have carts?
Yeah, so her and her teammate, there were 2 7th graders, carried their bags, and like 80% of the people had these little rolly things. You're not allowed to have carts, but they had these rolly things, and it was $2 to get one, to rent one. So I rented one, and I brought it over to her, and her little they make the rolly things for adult bags, and her bag is like a kid bag, so it didn't work out. So yeah, she carried her bag for 4 hours.
9 holes.
Yeah, the fun thing is, Josh, I'm not sure how many golf balls were in her golf bag, and I don't know that she would be aware of, like, I have 100 golf balls in here. I need to get rid of some of these.
Oh
Right?
no.
But we'll see. We'll see when she gets home.
Wow. And those we're talking 9 holes, like you're talking 200 to 400 yard holes, right?
Uphill, downhill for sure.
Dude, that's like 5 miles, right?
It's a nice day out. Sure. They're young
Oh
kids.
my gosh. I forgot I'm talking to the marathon guy. So 5 miles is nothing
Yeah.
to you. How's your training going? How was your last trip around Hefner?
Last trip around Hefner was great.
1 second while that call ends. 1 second.
Sorry.
Right there, right there.
Yeah. The Hefner was great. 6 miles this morning. I got 21 this weekend. I'm almost there. Almost ready. It's less than 30 days out.
Do you got a sponsor page? Can people go to a sponsor page and give you like treat money for like running treats and stuff?
No, just no. That's all.
Okay. For home loans, you guys
home
have
loans.
to call Tom. What's the best number they reach yet?
You can reach me 405-751-3800. You can go to gatewayokc.com.
Cool. As always, Tom, thank you so much for all this information. We'll see you next week. And I'm so excited to hear that she's golfing. And great idea on the golf balls. That's good thinking.
Yes, Josh, thank you so much.
Have a good one, sir.
You too. Bye.